Well, good afternoon, everyone, and we welcome you to our webinar on withholding basics. I'm Cindy Nellis, the director of the Penn West University Clarion Small Business Development Center. We're happy you're here. In today's webinar, we will be talking about withholding. Whether you're ready to hire your first employee, you already have employees, or you are looking to pay someone to perform these services for your business, today's training will help you navigate withholding basics from W-2 income to 1099s. You'll learn when you need to withhold from compensation, which income statements apply to different types of employees or contractors, how to file and pay withholding, as well as year-end reporting. Additionally, this module will touch on withholding for retirement income and PA rules for different types of retirement withdrawals. We're excited to partner with the Pennsylvania Department of Revenue to bring you today's webinar, along with our other 3 webinars that we hold, one each month. So if today's your first webinar that you're joining us, we hope that you consider joining over the next couple of months. So we are recording today's webinar, and I will share that recording probably later this afternoon with you, as well as the presentation slides that you see from me and from the Department of Revenue. If you have a question for me, I just ask that you put that in the chat. And then if you have a question for our experts from the Department of Revenue, I'd ask that you put that in the Q&A. We have a great team of experts here that's going to be answering questions throughout today's webinar. So I just want to give you a quick introduction to the Pennsylvania Small Business Development Center. We are a grant-funded program with a mission to help businesses start, grow, and succeed. We provide education, information, and tools to help businesses make better business decisions. We do this through primarily our business consulting services, and then, of course, our training. And as a client of the SBDC, you will have access to many tools and resources, databases, templates that we have on hand for you. Getting together with a consultant, we meet with individuals in person, virtually, by phone. And so all you need to do is reach out to us, get connected, request assistance, and I will be sharing how to do that shortly. We also offer many training seminars on a variety of topics that target the needs of our small business owners. And really, to us, a small business is generally defined as a business with less than 500 employees. We partner with many economic development organizations as well to help connect you to many more resources as you work to start and grow your business. In Pennsylvania, our Small Business Development Center network is made up of 15 centers. We are all located at institutions of higher education. With that host, it is a way for that host to give back to the community in which they exist. So we thank our host institutions. We are also part of the America Small Business Development Center. It's a national network that enables individuals and businesses all over the United States to access our program services right in their neighborhood. So here is our Pennsylvania SBDC website, as well as my website, my center email address, my email address. Truly, there is no wrong door in connecting with a small business development center. So connect with us today, and we'll make sure that you get connected with the small business development center that is in your neighborhood. So I'd like to introduce you to Rachel Washington. She is a research analyst with the Customer Outreach Relations and Engagement Division at the Pennsylvania Department of Revenue. So Rachel, I will turn it over to you and stop sharing so that you can share yours. And thanks for being with us today.
You are very welcome. All right, let me share my screen so we can get started. There we go. Can everyone see it okay? Did I not share? Let's see, I'm gonna try one more time.
No, I'm not seeing it.
1 second, please. Gonna buffer here. There we go. That
Yep,
looks a
here it
little bit
comes.
better.
Great. Thanks, Rachel. Yep, you're set.
All right. Hi, everyone. Welcome to Withholding Basics. I'm Rachel Washington, and I'm actually an administrative officer now here at the Department of Revenue. So, just so you guys have a little bit of background about me, I graduated from Temple University in 2022, and ever since then, I've been working for the Department of Revenue. And I work within our Customer Outreach Relations and Engagement division here at Revenue. And in this division, I make a lot of instructional Revenue 411 videos. And then on top of that, I'm really happy to share some withholding basics with all of you guys today. So let's get started. So today we are going to cover a wide range of information relating to withholding tax and the nuances that go into it. We will start with some fundamental information about Pennsylvania withholding, and then we'll move into the different types of withholding accounts we have here in PA. Once you understand what you need to do as a business owner, we will then talk about how to register for a withholding account. We will also talk through filing and paying requirements. And then after all of that, we will be covering some things you should know about record keeping. So, most new business owners don't actually realize just how important it is to keep good books and records. But please understand that this is for your benefit. So, if you ever get audited, which by the way is actually a standard business practice, you want to be able to show that you have done what is necessary to remain in compliance with the state. And then finally, we will wrap up today's presentation by reviewing some resources that are out there to help you find answers should you have any additional questions after today. All right. So let's go into the fundamentals. Before we get started, let's define a few key terms that you're going to be hearing throughout this entire presentation. The first term is employer. An employer is an individual or an organization in the government, private, nonprofit, or business sector that hires and pays people to perform work. This actually should include most of you. Employers have a responsibility to withhold certain taxes from the paycheck of those individuals on behalf of the federal, state, and local government. These taxes are called trust fund taxes. So then the next term here is employee. An employee is someone that another person or company, otherwise known as an employer, hires to perform a duty. Employers compensate employees for their work to grow and maintain their business. Employees typically have a specified pay rate and a written or implied employment contract with the party they work for. However, some hired workers are not legally classified as employees and have a separate tax classification. Which then brings us to non-employee. So, a non-employee is a self-employed person or entity contracted to perform work or provide services to another entity as a non-employee. As a result, non-employees usually must pay their own Social Security and Medicare taxes. They also have to remit estimated income tax payments. Alrighty. So the next term here is withholding. Obviously, this entire presentation is about withholding, but it's important to note that we are talking about the money that an employer deducts from an employee's gross compensation and pays directly to the government. Then we have compensation. PA compensation includes salaries, wages, commissions, and every other item of receipt related to employment, whether received directly, through an agent in cash, property, or otherwise, unless specifically excluded. Employer withholding is due on all types of taxable compensation, and it is not required on non-taxable compensation. A common item that may be excluded from compensation for a small business is an employee's personal use of employer-provided property or employer-provided services. Additionally, Any damage, whether by suit or otherwise, for personal injuries or sickness, and payments made under Workers' Compensation Acts, Occupational Disease Acts, or similar legislation for injuries received while working are not included in compensation. So then next we have benefits. Benefits are any form of perks or compensation that are provided to employees in addition to their base salaries and wages. Some are required by law, while others are optional. Employee benefit programs, such as pensions, profit sharing, stock bonus plans, and simplified employee plans, or SEPs, are established by employers to provide additional compensation to participating employees upon or after separation from service, the completion of a fixed period of participation, the lapse of a fixed number of years, or a showing of financial hardship. Employee welfare benefit programs are established by employers to provide benefits to employees or their beneficiaries, such as child care facilities, life, accident, or health insurance coverage, legal services, medical benefits, supplemental unemployment compensation, or SUC, tuition reductions, disability benefits, strike benefits, and dismissal pay. All right. So we're going to take a brief pause because I know that was a lot. And we're going to take a second here to read the question on the screen. What is included in compensation? When you know the answer, put it in the chat. I want to see what you guys say. Let me see if I can pull the chat up while you guys do that. If I can. All right. Alrighty. All right, you guys are saying D. More people are saying D. Is anything in? All right. So the correct answer is D, all of the above. PA compensation includes salaries, wages, commissions, and every other item of receipt related to employment, whether received directly through an agent in cash, in property, or otherwise, unless specifically excluded. As employers, it's important to know what is considered employee compensation and what is not. Please keep this in mind as we continue. So, non-cash benefits, which are reportable as compensation under Internal Revenue Service rules, are generally taxable for Pennsylvania personal income tax purposes and are not subject to withholding. Payments made by the employer to help employees with additional medical or dental expenses not covered by medical insurance is taxable. Payments made to workout facilities, gyms, life insurance payments, as long as they are not group life insurance, are taxable. And then so are non-job related educational assistance, pension plans, 401k plans, or other retirement plans. In general, payments made by employers for employees' welfare benefit plans that provide medical, dental, or vision care for their employees are not considered taxable compensation for Pennsylvania purposes. Further, supplemental unemployment compensation benefits and most group term life insurance premium payments should not be included in compensation. The personal use of an employer's property, leased or owned, or a service provided by the employer is not considered taxable compensation. Non-taxable items include the personal use of a company car, accounting services, or childcare provided not reimbursed by the employer. If it is money in your pocket, consider that taxable. 1 second. All right, so Pennsylvania withholding taxes vary by state. Well, withholding taxes in general vary by state and local tax jurisdictions. Most states operate like the federal government and have tax brackets, meaning the percent of tax taken depends on their income level. However, Pennsylvania is different. We have a flat tax rate of 3.07%, meaning regardless of how much you make, everyone is taxed at the same rate. Once again, that flat tax rate is 3.07%. The amount of tax withheld is a credit against the income taxes that the employee must pay during the year. For PA income purposes, there are 3 different types of withholding we are going to talk about, all of which can be filed on MyPath. The most common is employer withholding, next is other income withholding, and last is retirement withholding. The type of withholding account that you need varies depending on whether you hire employees or non-employees to do the work. Additionally, some miscellaneous sources of income may subject you to withholding, and retirement distributions will as well. An employer withholding account is necessary when you are issuing your employees W-2s. So next is other income withholding, which is used when the employee is issued a 1099 NEC. You will only create an other income withholding account if you choose to withhold taxes for PA on those 1099 NECs. And last is a retirement withholding account, which is used when the employee is issued a 1099-R. If you are a business owner hiring or contracting one or more individuals to provide services, then you must determine whether the individuals providing services are employees or non-employees before you will be able to decide what type of withholding accounts that you need. In determining whether the person providing service is an employee or a non-employee, all information that provides evidence of the degree of control and independence must be considered. So there are some common law rules. These are facts that provide evidence of the degree of control and independence fall into these 3 categories. First is behavioral. Does the company control or have the right to control what the worker does and how the worker does his or her job? Next is financial. Are the business aspects of the worker's job controlled by the payer? These include things like how the worker is paid, whether expenses are reimbursed, who provides tools, supplies, things like that. And then finally is the type of relationship. Are there written contracts or employee type benefits? So for example, a pension plan, insurance, vacation pay, anything like that? And will the relationship continue? And is the work performed a key aspect of the business? Businesses must weigh all these factors when determining whether a worker is an employee or non-employee. Some factors may indicate that the worker is an employee, while other factors indicate that the worker is an independent contractor or non-employee. There really is no magic or set number of factors that truly makes the worker an employee or an independent contractor, and no one factor stands alone in making this determination. Also, factors which are relevant in one situation may not be relevant in another. The key is to look at the entire relationship and consider the extent of the right to direct and control the worker. Finally, document each of the factors used in coming up with the determination. If it is still unclear whether a worker is an employee or an independent contractor after reviewing these 3 categories of evidence, then Form SS-8, Determination of Worker Status for Purposes of Federal Employment Taxes and Income Tax Withholding, can be filed with the IRS. The form may be filed by either the business or the worker. The IRS will review the facts and circumstances and officially determine the worker's status. Be aware that it can take at least 6 months to get a determination. A business that continually hires the same type of workers to perform particular services may want to consider filing the Form SS-8. So, reporting compensation. Additionally, you need to know if you have employees or non-employees so that you can determine what form to use for reporting compensation at the end of the year. If you have employees, you will need to issue a W-2 and file in duplicate with the PA Department of Revenue. If you hire non-employees, you will need to issue a 1099 NEC. And if you pay via miscellaneous sources of income, you will need to issue a 1099 miscellaneous. In addition, your employee may receive a 1099-R if they took a distribution from retirement, but that will likely be issued from the financial institution that is administering their retirement or pension plan. It's important to note that these forms need to be filed in duplicate with the IRS and the Department of Revenue, regardless of whether there is actual withholding, so long as you have paid more than $600. So, once you have determined that you have employees, you need to withhold income tax for their compensation using a W-2, thus requiring an employer withholding account. Pennsylvania law requires employers, like many of you, to withhold Pennsylvania personal income tax from employees' pension in two common cases. When resident employees perform services within or outside Pennsylvania, and when non-resident employees perform services within Pennsylvania. In simpler terms, if you are a business located in PA or conducting business in PA, you should withhold income tax on all compensation paid to PA residents. But if you are only required to withhold on PA source income for non-residents. So, if the employee doing the work does not live in PA, but the work is being performed in PA, there is a withholding requirement. Whereas, if the employee does not live in PA and the work is not being performed in PA, there is no withholding requirement. Once again, the PA personal income tax rate is 3.07%. This means you must withhold 3.07% of the gross compensation that you are paying your employee. We encourage you to deposit this into a separate bank account until you are ready to remit payment to the department. And we will go into that, by the way, I saw in the chat, when we go into other income withholding. Now, back on employer withholding, we're going to talk about reciprocal states. The only exception to what I previously said about employer withholding is when an employee is a resident of Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia. Those states are considered reciprocal states, meaning that if their employees live in one of these states, employers will only withhold taxes for that state. So, even though it may be deemed PA-sourced income because the work is being performed in our state, we have agreed not to tax them based on their residency in one of these reciprocal states. In these cases, the business is not required to withhold Pennsylvania income tax on the PA-sourced income if the employer withholds to one of the aforementioned states. Employees who live in these states must submit an REV 419. Once again, that is REV-419 to you, their employer, to indicate they live in a reciprocal state. You must keep the completed form in their payroll records for at least 4 years in case of a withholding audit. If a business mistakenly withheld PA income tax for a resident of a reciprocal state, the employee will need to file a PA 40 Pennsylvania personal income tax return to request a refund. So, a really great example of this would be if your company is located near the border of Pennsylvania and Ohio. If you hire an employee who lives in Ohio but commutes to Pennsylvania to work, you do not have to withhold Pennsylvania taxes for your employee because Ohio is a reciprocal state, and you should instead withhold for Ohio. So, if you have determined that you are hiring independent contractors or non-employees to perform services and withhold their taxes, you will be required to open an other income withholding account. You will see on this slide that you are required to open an other income withholding account when you hire non-employees that do not reside in PA to perform services worth over $5,000 for the year. Per the IRS rules, the 1099 NEC non-employee compensation must be filed for each person that is not an employee of a business to whom the business paid at least $600 during the year. So for that person that asked about $600, I'm just going to repeat that sentence one more time. Per the IRS rules, the 1099 NEC must be filed for each person that is not an employee of a business to whom the business paid at least $600 during the year. However, Pennsylvania rules state that non-resident withholding doesn't kick in until $5,000 of income is paid to an individual or business. What is unique about other income withholding is that it only applies to non-resident, non-employees to whom you pay over $5,000 annually. This means if you hire a resident contractor or non-employee who lives in PA, you do not have a withholding requirement. In these situations, you will still need to file the 1099 NEC to report the income you paid, but you will not need to collect any withholding. Rather, the non-employee should be making estimated payments on their income as a PA resident. Another reason you may have to open an other income withholding account is to report miscellaneous sources of income. Again, withholding is only required if you pay via miscellaneous sources of income to non-residents in the amount of $5,000 or more for the year. As we mentioned previously, miscellaneous sources of income are reported on the 1099 miscellaneous. So, withholding on a 1099 NEC. Let's go over it. A business is required to file Form 1099 NEC and withholding PA personal income tax if all of the following four conditions are met. The non-employee does not live in PA. Payment was made to an individual, estate, trust, or disregarded entity owned by an individual, estate, or trust. Payment for services was made in the conduct of your trade or business, and the payments equaled more than $5,000 for the entire year. On the other hand, the withholding of PA personal income tax is optional if the payments did not total $5,000 for the year, if the non-employee lives in PA. Remember, withholding is not required on Pennsylvania residents. If the payment was made to a partnership, corporation, or multi-member LLC. Those entities actually have their own non-resident withholding requirements, but we're going to get into that. We're not really going to get into that at this time. And then finally, if the payment was for services not related to your business. So please keep in mind that the payments we are referring to here is anything that falls under the compensation class of income or business class of income for 1099 NECs. We also mentioned miscellaneous income. So here are some examples of miscellaneous income. Royalties or broker payments, rents, prizes and awards, medical and healthcare payments, crop insurance proceeds, cash payments for fish or other aquatic life you purchase from anyone engaged in the trade or business of catching fish. Generally, the cash paid from a notional principal contract to an individual, partnership, or estate, payments to an attorney, any fishing boat proceeds. So, for PA purposes, you are required to withhold PA personal income tax on certain payments of PA source compensation, business income, and lease or rent payments made to a non-resident individual or entity. This requirement applies to payments that meet or exceed $5,000 annually. Most often, small businesses would use the 1099 miscellaneous if they are paying rent to someone for their space. If the rent is more than $5,000 a year and the landlord does not reside in PA, the business should withhold personal income tax at a rate of 3.07% from the payments. Keep in mind that to qualify, you must be making rental payments to an individual, estate, or trust. If you are renting from something like a property management partnership, you don't have to withhold. As mentioned previously, partnerships, corporations, and multi-member LLCs have their own non-resident withholding requirements. Please be sure to follow IRS rules for issuing the 1099 miscellaneous. And finally, the last withholding account is retirement withholding. As a small business, you will likely not open a retirement withholding account, as you will probably not be the administrator of the actual retirement plan for your employees. However, just for general information, the Form 1099-R must be filed for each person who made a designated distribution in excess of $10 or more from profit sharing or retirement plans, any individual retirement arrangements, so IRAs, annuities, pensions, insurance contracts, survivor income benefit plans, permanent and total disability payments under life insurance contracts, and charitable gift annuities, etc. Once again, we're going to take a brief pause to see what you guys remember. Take a second and read the question and put your answer in the chat, please. You can also put the answer in the Q&A. All right, so one person is saying B. Another person is saying B. 3 for B. I'm going to give you guys just a couple more seconds here. One person said A. All right, I'm going to go ahead and give you guys the correct answer. The correct answer is B. The 1099 NEC, non-employee compensation, must be filed for each person that is not an employee of your business if your business paid them at least $600 during the year, according to the IRS. However, PA rules state that non-resident withholding doesn't kick in until $5,000 of income is paid to an individual or business. Remember, other income withholding only applies to non-resident, non-employees to whom you pay over $5,000 annually. So once you have determined what kind of withholding accounts you need, you would then have to register them on MyPath. So let's go over how to register. Registering for business tax accounts is going to vary slightly depending on whether you are an existing entity in PA or a brand new entity. For brand new entities who do not have any existing tax accounts with the PA Department of Revenue, you will need to complete the PA Online Business Registration Form from the MyPath homepage. To get started, you will type in mypath.pa.gov and scroll down to the panel titled Registration. From there, you will click the link that says Pennsylvania Online Business Tax Registration and run through a series of questions. The system is intuitive, and depending upon how you answer the questions, it will determine what questions you are presented with next. Once that is complete, you will immediately receive a confirmation number, which you will want to save for your records. Additionally, you can use that confirmation number to create your MyPath profile. If you need help setting up your MyPath profile, please see our Revenue 411 video on creating a primary user profile. Now, if you are an existing entity, say you have a sales tax account and now you want to add employer withholding, you need to create your MyPath profile, or if you already have one, log into your profile and click on the More tab at the top of the screen. From there, you will find a hyperlink that says Register New Business Tax Accounts. This is very similar to the one on the homepage, but some of the information will be pre-populated for you since you already have existing accounts with us. So please keep in mind that most of the time, sole proprietors have what we call existing accounts because their personal income tax accounts are linked to their social security number. So if you're attempting to register from the homepage and you are getting an error message, this is likely the problem. Log into your MyPath profile and go to the More tab instead. Registering online establishes business tax accounts with the Pennsylvania Department of Revenue, and as well, it also opens unemployment compensation accounts administered by the Pennsylvania Department of Labor and Industry. However, all filing and payments for unemployment compensation withholding must be done through the PA Department of Labor and Industry. All right, so once you are completely registered, you can get started with filing and paying your withholding taxes. Withholding returns are filed every quarter with the Pennsylvania Department of Revenue. Every business owner that's required to deduct and withhold tax must file a quarterly return of income tax withheld on or before the last day of April, July, October, and January for the prior 3-month period. In addition, these returns must be submitted electronically. Currently, there are 2 methods in which you can do this: online or by using a third-party vendor. We strongly encourage you to use our online MyPath portal to file and pay your withholding tax accounts for your withholding tax amounts. Not only are you able to file and pay for the current year, but you're also able to view previously filed returns, access notices that have been issued from both MyPath and the old eTide system, request statements of accounts that are available immediately, send messages to the department, and more. And another very important feature of MyPath is that you can grant permission to others, like your bookkeeper, to also view information regarding your returns. You can access the MyPath portal at mypath.pa.gov or simply visit revenue.pa.gov and click on the icon that says MyPath right from the homepage. Please note that you must create a user profile to utilize this service. Again, if you need assistance with creating your user profile, please see our Revenue 411 video on creating a primary user profile. If you need help with filing your withholding return, you can also watch our Revenue 411 video on filing a quarterly W-3. Lastly, the department does have approved third-party vendors who will provide e-filing software for customers who do not wish to use the MyPath portal. A list of approved software vendors is available on the department's website at www.revenue.pa.gov. So, payment frequency. Whereas the filing frequency for withholding taxes is always quarterly, the payment frequency may vary depending on the amount of withholding that you are collecting each quarter. When you initially register for a withholding account, your payment frequency will automatically be set as quarterly. Near the end of every year, the Department of Revenue reviews the average of the current first and second quarter withholding payments, as well as the prior year third and fourth withholding quarter payments, to determine if the filing frequency needs adjusted. If the payment frequency needs adjusted, the filing frequency will always stay quarterly. So, if your total withholding is $300 per quarter, you would have a quarterly payment frequency. In this case, taxes are due the last day of April, July, October, and January. If your total withholding is $300 to $999 per quarter, you would have a monthly payment frequency. For these employers, the taxes are due the 15th day of the following month. Now, if your total withholding is $1,000 to $4,999.99 per quarter, you would have a semi-monthly payment frequency. For semi-monthly employers, the taxes are due within 3 banking days of the close of the semi-monthly period. And lastly, if your total withholding is $5,000 or greater per quarter, so $20,000 per year, you would have a semi-weekly payment frequency, in which case the taxes are due on the Wednesday following the pay dates for employers whose paydays fall on a Wednesday, Thursday, or Friday, and on the Friday following the pay dates for the employers whose paydays fall on Saturday, Sunday, Monday, or Tuesday. So, I know that is a lot of dates and amounts to remember. Thankfully, the department publishes a schedule every year, which is called the Rev 1716, that is REV-1716. This breaks down filing and payment due dates by filing frequency. Customers may request a payment frequency change if they so desire. A change to a more frequent payment schedule must be requested 15 days prior to the beginning of any quarter. You may request a frequency change through the MyPath portal by logging into your profile and selecting the frequency change hyperlink, or by using the Send a Message feature to submit a written request. An employer may change to a less frequent payment schedule only at the beginning of a calendar year. So, as long as the amount required to be deducted and withheld for each quarter is reasonably expected to be less than the criteria amount for the current payment schedule. So, similar to filing the returns, employers can remit their withholding payments one of two ways. Our recommended way is online via mypath.pa.gov, or they can use a third-party vendor. Important things to remember. Payment vouchers are only available via MyPath, and the use of other tax forms could result in non-filer notifications and/or the misapplication of the tax payment. Per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfer, also known as EFT. Failure to comply with the electronic funds transfer remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, not to exceed $500. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So, if every quarter you send in a check for over $1,000, you're going to get hit with an EFT penalty every quarter. If you need assistance remitting your payment via our MyPath portal, please see the Revenue 411 video titled Making Period Deposit Payments. In addition to remitting quarterly returns and payments, employers must also file an end of the year annual reconciliation Rev 1667. This annual reconciliation not only reconciles all 4 quarterly returns that were remitted, but also reconciles any W-2s or 1099s reported by the employer. You must do this for each withholding account you have. I will repeat that because that's very important. You must do this for each withholding account you have. If you need help, please watch our Revenue 411 video, Filing a Rev 1667. We cannot stress enough the importance of filing the annual reconciliation. Every year, there are many new small businesses that forget to file the Rev 1667, which then flags the account for noncompliance. So when you're filing a 1099 miscellaneous or a 1099 NEC, ensure that you only enter information for the amounts on which you withheld Pennsylvania state taxes. If no taxes were withheld, leave those fields blank. Please allow up to 48 hours for W-3 deposit period payments and income statements, W-2 wage records, 1099R distribution records, and 1099 miscellaneous 1099 NECs to automatically populate on your return. If the pre-populated figures do not match your records, you may manually adjust the return figures or allow enough time for the payments and income statements to process, which is about 48 hours. When manually adjusting the total compensation and the total tax withheld, you must include the number of income records that will be provided to support these totals on the records filed but not yet processed by the department field. Figures for each quarterly period, the amounts of wages or distributions paid, and tax withheld in Part 2 are pre-populated based on the information previously provided to the department. These fields may also be manually updated if quarterly returns have not been previously filed and/or processed. The Pennsylvania Department of Revenue is reminding customers that the employee W-2 wage records and 1099s must be submitted annually to Pennsylvania by January 31st following the tax year being reported. This includes 1099Rs, 1099 miscellaneous, 1099 NEC, and annual withholding reconciliation statements, Rev 1667s. Customers who file 10 or more W-2s and/or 1099s are required to file those records online through MyPath, the Department of Revenue's online tax filing system. You can also upload files in bulk using the CSV format. For detailed instructions, click on the View File Specifications button. Record keeping. So the same laws that impose taxes also impose record-keeping requirements. Records must be maintained for specific periods of time so the PA Department of Revenue may administer tax laws effectively. The general rule is that you have to keep records as long as necessary. Many times, this means you must keep records supporting the information on a tax return until the period of limitations for that return expires. A period of limitations is the amount of time the department has to assess additional tax and the amount of time you have to amend a return to claim a credit or refund. Periods of limitations for withholding tax assessments is 3 years, and it begins when a return is filed. If returns are filed before the due date, they are considered filed on the actual due date. For refunds, the period of limitations is based upon the date the tax is paid. To comply with regulatory requirements, An employer must maintain records for each and every employee and of how much, if any, of the tax was deducted or collected during the payroll period. Records must provide a breakdown for each of the following: amounts withheld greater than the required 3.07% pursuant to a written agreement under 61 PA Code Section 113.3b, and amounts deducted pursuant to 61 PA Code Section 113.72 for an under-collection in another withholding period, and any amounts deducted in error. Remember that we follow many of the same reporting and documentation requirements as the IRS, so make sure you consult their requirements as well. In addition to your payroll records, you must show that you withheld Pennsylvania personal income tax on all taxable compensation at the proper rate and that you remitted the withholdings to Pennsylvania. To show these listings, you must have documentation showing the following: amounts and dates of all wage, annuity, and pension payments made to employees, amounts of tips reported to you by your employee, records of allocated tips, records of fringe benefits and expense reimbursements provided to your employees, dates and amounts of the tax you withheld from their pay, dates and amounts of your withholding tax deposits. We advise that you do separate deposits for these transactions so they are easily reconciled with your books, and copies of withholding tax returns you filed and confirmation numbers. A standard payroll journal and an accrual account can be used to record this information and will help serve as the basis for completing the W-2 wage record report. As we discussed earlier, employees who are residents of reciprocal states do not owe personal income tax to PA on their wages, as their W-2 income is taxable only to their resident state. So, if your employee lives in Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia, please have them complete a Rev 419 and retain for your records. Again, as a reminder, if you, the employer, accept the Rev 419, you must withhold the reciprocal state tax. Otherwise, you must continue to withhold to PA. $1099 recipients are slightly different in that you don't have to worry about any benefits or business expenses. Anytime there is PA taxable income for non-employees, it should be reported on a 1099. You will be required to submit copies of the 1099 NEC or miscellaneous forms showing recipient number, last name, rents, royalties, other income, medical, healthcare payments, gross proceeds paid to an attorney, non-employee compensation, box 1, state tax withheld, state income, schedule type, and if any corrections were made. We stated in the last section that you are required to file a quarterly employer withholding return and then an annual reconciliation for your employer withholding accounts. Your payroll expense records will become the basis of your quarterly employer withholding return, W-3. Your records should demonstrate all taxes were withheld at the proper rate and that they were remitted on time. You should keep copies of your W-3 returns as they will help you in filing your Rev 1667 annual reconciliation. It is important to know that periodically, the Department of Revenue conducts desk reviews or audits in which they review the records of thousands of businesses for tax compliance. This is to ensure businesses have a correct understanding of their Pennsylvania tax exposure and that tax laws are administered in a fair and equitable manner. The reviewer or auditor may conduct a complete review, or they may utilize test methods that allow for the examination of a representative portion or a sampling of the taxpayer's business activities. However, when records are incomplete or inaccurate, the department will develop tax estimates based on other information resources. This other information includes other tax returns and government or industry data applicable to the business. The courts have upheld the department's right to use estimates in developing tax liabilities when reliable records are not provided as required. This is why it is extremely important to ensure you are keeping complete and accurate records at all times. All right, resources. Withholding tax is a very important tax for business owners to deal with, as it is considered a trust fund tax, meaning that the employees are trusting the business to withhold and remit their taxes on their behalf. And the Commonwealth is trusting you to make those remittances timely to the Department of Revenue. Let's discuss some resources that are available should you have any concerns following today's presentation, or questions as well. Some of these have been mentioned previously, and this is simply serving as a reminder. First is the Rev 415 Employer Withholding Information Guide. This guide contains all of the information that we reviewed here today and more. It covers withholding requirements, taxation on benefit programs, expenses, collecting and remitting your taxes, as well as overpayments and refunds, guidance for payroll providers, as well as phone numbers for areas to contact depending on your question or needs. This is available on the Department of Revenue's website at revenue.pa.gov. Or you can search under Forms and Information, Forms for Businesses, Employer Withholding Forms, or simply type in Rev 415 into the appropriate search bar on the homepage. All right, next is the Rev 580, which is our FAQ sheet for withholding. This contains commonly asked questions regarding employer withholding tax and detailed answers. This also includes parameters for paper W-2 submission, phone numbers, and the website for the online customer service center, which I will go over shortly. Here, we have the Rev 588, Starting a Business in Pennsylvania, a Guide to Pennsylvania Taxes. This is a fantastic resource that touches on all the basics for new business owners. This guide includes information for sales tax, as well as registration, withholding tax, and other items that go into owning and operating a compliant PA business. The Rev 1716 is the schedule put out each year that breaks down filing and payment due dates by filing frequency. Both the 2024 schedule and the 2025 schedule are published and available on Revenue's website. In addition to payment due dates, this calendar also breaks down the filing due dates. The Rev 1611 is the form used to calculate the interest on all taxes after January 1st, 1982. It is calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. All right, so we strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL listed on the screen or click customer service icon directly from Revenue's homepage. Here, you can find thousands of frequently asked questions. These responses are updated regularly to ensure that the information you are receiving is accurate and relevant. If you are not able to find an answer to your question through the FAQs or general website resources, you also have the option to submit a question to the department. This feature allows users to submit a general taxability question or a more pointed question regarding a specific scenario to a trained representative who specializes in withholding tax. We will review your submission and respond within 72 business hours in a process that is similar to receiving an email. Least we forget, the Customer Experience Center call center. Here you will be able to speak to a representative skilled in whichever particular tax type you pick from the menu prompt. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. And last but not least, and most certainly my favorite, we have created what we call Revenue 411 videos to help with filing and paying your taxes. We have mentioned a few of these videos throughout the presentation today, but we encourage you to visit revenue.pa.gov/videos and see what we have out there. All right. And very quickly, I know it is already 1 o'clock. I'm just going to go over this quickly. What is the name of the employer withholding information guide? All right. And just so that you guys remember, this is one of the more important ones for you. It is the Rev 415. Awesome. Rev 415. Thank you so much, everyone.
Thanks, Rachel. Okay, oops, I want to launch my poll. I have a quick one question poll. I will launch it. And while we do that, I am going to just remind you that coming up next month, we have Getting Started with MyPath on September 10th. So I will be sending out our tax series flyer along with the presentation slides. Thank you, Rachel, and your team for this great information. And I look forward to having everyone join us again. Okay, great. Rachel, thank you for answering Cheryl's question. I'll hold off just quickly and we'll make sure we get that question answered. So the 717-787-1064 is the phone number. Great. Great. Okay. If there are any other questions, now would be the time to add them to the the Q&A. Okay, I don't see any more. So, okay, so I'm just gonna go ahead and end today's webinar. I will be sending out the slides and the recording. And again, thank you to Rachel and your team of experts. I appreciate it. And we look forward to seeing everyone back here next month on September 10th. Thanks, everyone. Have a great afternoon.